Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, the blast market, and how to make money by leveraging the internet and the latest technologies. I'm your host, B Check. I'm joined by my legendary co-host, Legendary, and we're going to get into everything that's going on in the NFT market from the last 24 hours. Very excited to do that. All kinds of interesting stuff going on. Blast is absolutely blasting off. And so we're going to get into some of the key details, maybe some of the key concerns as well, to make sure you are aware of those. Maybe even talk a little bit about some personal strategies, hear what people think. I made a big decision with respect to Blast yesterday. Might chat a little bit about that too. And but as we do that, just remember, folks, that nothing that we say here is financial advice. Everything that we do and that we speak about is exceptionally risky. We do not know anything for sure. Please proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are you doing this Thursday, the 23rd of November?
GM. It is Thanksgiving, isn't it?
It is.
Wonderful. You're in a great mood today. I love that. I love that in particular because we are meeting each other after the show. We are going out for lunch in London. And I just could tell by the intro with you going B, check, legendary, that there is a good mood, and definitely agree with Funky, who keeps asking day after day after day, when will there finally be the modern market rap battle over the intro music or throughout the show? I would love to see that.
I would love to see it too, specifically because I know what your rap taste in music is, and it's deeply, deeply aggressive. However, the good thing about it is that we wouldn't need to subject our English speaking audience to it, because I suspect you'll go for the very complex German you'll be delivering in a German in the German language. So I think, you'd be able to say everything that you want, all of your hopes and dreams for whatever you want from the rap battle, all the disgusting, distasteful, outrageous things that you love in your rap music, Legendary. You'll be able to say without any of us knowing. How do you feel about that?
Absolutely love it. Love it. I could go for German for spitting the bars and have a hook in English that's about like pumping my bags and farming airdrops and falling for rugs to make it a bit more balanced. I think that would be a good thing. But in all seriousness, I love it in German rap when they go for French hooks. I feel like
Oh,
those two languages go very nicely together in rap tracks.
that sounds so random. I have definitely never heard of German French combination, but I guess a lot of rap music is getting in. Well, yeah, I guess English and other things are always mixed, so there's no real reason why other languages shouldn't mix too. But you mentioned Thanksgiving, Legendary. We are obviously not in the States, so we keep going. However, I was wondering, before we get into the show, what are you feeling thankful for?
What do I feel thankful for? The markets.
You sounded like you had no idea what you could be thankful for.
No, man, I love where we are with our show right now. Honestly, it's been such a great journey. Everything. I love how we started with the airdrop product last year. Picked up the show, built everything we have. I love the positivity in the market. I love all the friends that I've been making this year throughout the show and throughout conferences and being active on X as a creator. Quite a lot of things to actually be thankful for.
Sounds pretty good. Sounds pretty positive. I would say that I am thankful for. I don't know. I don't really know what I'm thankful for, but I was going to say I've got some great ideas for what we'll talk about later. Maybe I'm great. I'm thankful for coming up with these ideas that we're going to talk about later. Does that
So
really count as
humble,
being thankful?
so humble. You're thankful for your own genius and grandeur when it comes to the ideas that you have. I love it.
They're really good ideas. They're really good ideas. That's all I'm going to say. Thankful for those. Thankful for the opportunity that you're going to give me, Legendary, to tell you my great
Those
ideas.
those ideas, I love it.
So yeah, I'm
One
thankful
more
to you too.
One more question. Are you thankful for, I don't know if you've seen it, the @NFT account being back on Instagram? The number one ruggers and grifters have returned after a long hiatus. Is this a top signal? Is this something to be thankful for?
I did see that, and I do really look at these types of things as indicators of things, and so I think it's definitely a signal. It's definitely a signal when, um, and I actually don't know their history, but I just saw that lots of other people said that they were grifters and promoted really bad projects. So I can't verify any of that. I don't know, but if any of that is true, then actually that's super bullish because it means that people think that there's more liquidity and activity taking place in this space. So they're coming back. So long as we, as a collective community, all the listeners on the show, we ourselves steer clear of the grifters, that's obviously the aim, then it's probably bullish in general that grifters are coming back. It's just that you got to be a little bit careful. What were your thoughts?
Yeah, I like the positive take. Definitely would say that the Instagram account, the NFT account, it has promoted more scams, rugs, and shitty projects than all of the ads on X together. So it has quite a history, and it took a 22-month hiatus. But it definitely speaks a lot if it's coming back and sees the interest to do that. So there is a positive lens to view it under, I guess.
Absolutely. That's what I think. A positive lens. Let's get into some of the positive news that we've seen in the last 24 hours. As always, this is coming from the snapshot, which is pinned up top. If you do find it helpful to you, please do like it. If it brings you some value today. So let's get into it, starting with the price action. We have crypto up a few percent. Bitcoin's up 3% at 37.4K. ETH was up 4% at 2.1 not long ago. Solana up 6% at 58.1. Ape up a few percent at 1.5. NFT volume was up on the day as well. Total was at 15.4 million. Blur at 9.8. OpenSea at 5.1. The headlines for you today is that the Blast TVL has reached, well, when I wrote this, it was 240 million or whatever tweet I was using to justify that. I think it's up to 300 million now. Legendary corrected me. And the Blur token itself has gone up to 50 cents. That is big news. Want to talk strategy there and thoughts. Next, Jack Butcher's trademark 10K collection mints out at a 0.69 ETH price in minutes. And finally, the ACK Worthy collection sells out at 5K, and it immediately does a 4 to 5x, which is pretty great return for the holders or the people who won the raffle. But we're going to talk a little bit about that in a second. Just a little side note: reported on that literally multiple times in the snapshot over and over again to the people who are wondering where interesting opportunities may be reported in advance. Getting into the the NFT floor prices and notable sales, we have CryptoPunks down 1% at 55.6, Bored Apes up 7% at 28.4, Mutants at 5.3 up 6%, DGods at 3.1, Captains up 3% at 4.4, Azuki's up 5 at 5.6, Penguins up 6% at 5.9, Moonbirds at 2, Nouns at 40. Some top sales with a Mad Lad selling for 792 SOL. That's $40,000. Well played to the Mad Lads. And a Rare Pepe Nakamoto card selling for 53. That's $110,000. Legendary. I've got a few thoughts on some of those numbers. But what's taking your attention straight away?
You know, I'm a big fan of the Rare Peppers. Always love to see them in the snapshot. But also, I find the Mad Lad sale at more than 40K really, really impressive. I like that in the Mad Lads collection, they took the time to go for really cool female avatars as well that do capture premium. That's not really the case in many, many other collections. So that's a cool thing to note as well. There is another number that stands out, but I want to hear your thoughts on numbers and the market first.
Okay, so the main observation for me, yesterday we spoke a lot about the NFT lending market, and I kind of brought people up to speed with what was going on the lending side and how basically blend lend market went a bit broken for a day as season 2 came to an end, and the APRs went really, really high. There were no lenders. Everyone was pulling their liquidity. And I guess people, and then the market was down a little bit yesterday, right? And it just seems like the market has basically shrugged off all of those concerns. Any potential downside has been mitigated, and people just think, no, we're fine. We're fine at these prices. So you can basically see across the board all the major NFT collections uh, probably gaining back whatever they lost over the last few days. So Bored Apes were up 7%, Mutants were up 6%, Captain's up 3%, Azuki's up 5%, Penguin's up 6%. So I think in general, the broad observation, obviously some slightly more than others, and there's probably some more nuance to it, is that the major NFT collections basically just got back any of the losses as part of the fear around Blur season 2 coming to an end.
I think that's a very, very good assessment. And again, I think it is so tremendously important to follow the lending markets because they really tell you so much more about how the market feels, about the current prices, about the current floor prices that we're seeing for NFTs. And it is just very, very helpful to have that information.
Absolutely. So that's my major insight. But you mentioned there was something that took your eye or that you wanted to speak about. What's your thoughts?
Absolutely. So what took my eye, something completely different, but it is a number. If you look, and it will be the perfect segue into our first news. If you look at the comments, we have 22 comments. If you click on them, you will see Funky saying to bookmark like the space. You will see Dow Jones wishing us a happy Thanksgiving. You will see Kusho and K Sensei commenting, as well as Noel, which makes 5 comments. So the question is, what are the other 17 comments? And it is all bots promoting their own Blast referral link. We have 17 bots because we chose Blast as the title of the space, promoting their referral code in the.
Interesting. I'm just looking now. That is very, very interesting. So yes, happy Thanksgiving, Dow Jones and everyone else. Good morning, Jack. Good morning, Funky. Good morning, Kusho. Good morning, Sensei. This is one day of the year when I go around posting this chart everywhere. 1001 days in the life of a Thanksgiving turkey. I'm not sure what you mean by that. What does that mean, Sensei, in this context? Are you saying who's the turkey? Are we just thinking about the turkey, or is this a metaphor for us? Maybe I'm overcomplicating it. But yes, good morning to everyone. Happy Thanksgiving. And yeah, interesting that there's a lot of bots back. Again, what's your take there? Big indicator? Everything's just an indicator now. We're using everything
Yeah,
as a way to.
we're using the bot indicator. No, I like the diversification in bots. It's not only mutant apes anymore. We have mutant apes, we have Pepes, we have Bored Apes. So it seems like the bots are diversifying their PFP appearance because they believe that more NFTs are now back and relevant. So even the bots are making me bullish today.
That's so funny. Okay, so the bots are bullish. I think the existence of the bots are bullish. Legendary thinks the diversity in the bots are also bullish. Let's get into the bullish bots in the Blast TVL news. So, Blast, we spoke extensively about yesterday. We want to get into it again just to explain on a headline level that it's now gone past $300 million total value locked. Blur has simultaneously got to $50. Legendary, what's your thought on where we are with it? I know one of the big deposits yesterday was someone who deposited 10,000 ETH into Blast. So that's $20 million, which is obviously a huge amount to deposit in one go. So I guess the key question here that people will be interested in is what's the play? What's the play? We've broken Blast already down. What's the play here? Lots of people are now bridging over, and some in huge, huge sums. What are you thinking about the distribution of people's attention and capital when you're thinking about the blast airdrop and bridging over to that multi-sig versus buying the token, staking, continuing with doing the airdrop farming on Blur as a trader?
Multiple thoughts on that. I think the reason why Blast is so popular right now is because it's easy. Everyone has seen the track record of the Blur airdrops, but kind of forgets that for the Blur airdrops, you had to actually be doing something. You
Correct.
had this one guy that Cyrus pointed out who started with, I don't know, 2-3K and grinded his way up to a six-figure airdrop. No, sorry, NFT Stats pointed that person out. You had people like yourself who played around with the lending, went in quite some risk, borrowed or lended that CryptoPunk. So you had a lot of activity, and that's the typical nature of airdrops, right? If you farm ZK Sync, if you farm Layer Zero, if you go for other things, you have to actually be doing something. Whereas in Blast, it's kind of becoming a whales game where you can just deposit however money you want to deposit into that multi-sig because it's not a layer 2 yet, and try to make the most out of it. And of course, it's already blowing up when we talk about TVL. But I think one aspect that we also have to keep in mind is that the points that you accumulate, the blast points that you accumulate by bridging, or it's not even bridging because there's no L2 to bridge to, by depositing into that multi-sig, only account for half of the entire airdrop. The other half is for devs who will do bring their own protocols or new protocols to Blast in the future. And then, of course, those devs have a high incentive to use that allocation of Blast tokens, or however those tokens will be called, that they will get in the future to redistribute them amongst the people who supported their protocols in the future. So right now, I would say it is pretty much a whales game. You've either been early with the referral links and have a couple friends with a lot of ETH who you could have onboarded, and they onboarded more friends, or you have to join a squad that has a lot of ETH deposited to have a chance to increase your luck and go for spinning the points. But however, if you're a smaller participant in the market, I would say that probably the more interesting strategy is going to be, I mean, yes, deposit something in Blast if you want to, and you're obviously aware of the risks and potential consequences of losing that all right now, but rather focus on the launch of the testnet next year, focus on some of the dApps that will be available on Blast, and see that as an opportunity to actually do something more actively to farm the airdrop than just depositing money if you can't keep up with the whales game.
Yes, that is an interesting perspective. I think hang on 1 second. There we go. I think I broadly agree that it's getting a little bit out of hand in some respect. And one of Cyrus's points was that if people are going to start depositing 10,000 ETH at a time, then that's obviously coming out of your yield, right? Like whatever. Well, actually, I don't know. To what extent do you think that the value going up means that, or the value going up as a consequence of certain people putting in huge amounts, are they eating into your potential yield? Or is it one of these things where as the pie gets much bigger, your allocation is going to get bigger as well? Do you have any thoughts on that first before I then go and kind of break down my strategy?
Again, it depends on what you will be able to do with the blast tokens. I mean, you could have made the same argument. The blur pool got pretty big, but then the team came up with a bigger carrot, the blast machine, to lock your blur up. So it depends. And I mean, the team has kind of shown that they're not like, okay, we unlock the token and we let it down to zero. We have something in mind for when the unlock is there, to have another incentive structure going to keep people from motivated to demotivate people from dumping the tokens, and try to keep them locked into the ecosystem. So
Sure.
yes, you could argue it eats a bit into the yield, but then I also would argue that Pac-Man and whoever's doing the token design with them are trying to find the best incentives to keep people locked up as long as they can in the blast machine.
Okay. Yeah. I mean, it makes sense. The reason why I ask is because obviously you mentioned it's maybe turning into a whales game, and people will want to try to figure out for themselves, like, how's the best way when I don't have loads and loads of ETH? Like, what's the most appropriate way for me to allocate? And I guess the answer is it's not a perfect science. and there's not a perfect answer. But you mentioned being, I think the things where you have to go against people who are just depositing huge amounts, like, of course, you're at a disadvantage if you can't keep up with that volume. However, whenever there's an opportunity where you actually need to put in some effort and some thought and some strategy, then you can beat people with who have more capital than you, because you can actually use your brain and think about how to allocate appropriately. So you mentioned one option is to use the dApps when they come out later, because that actually requires some effort. Maybe the people with more capital will be too lazy to be bothered to do those types of things. So that would be one option. But the other option, again, and this is something which people probably can't be bothered to do, and it takes some trial and error, is that you can continue to farm the actual protocol by lending and listing and bidding. And there was a great story, as you said, that someone pointed out, where someone with, I think, no more than 3 ETH managed to get almost a six-figure airdrop. I can't remember precisely. I don't want to misquote it. Legendary, maybe you could find that information just as I kind of finish speaking. But basically, that's how you differentiate yourself as someone with less capital. Like, the way you differentiate yourself is by actually doing something, making an effort, and participating in ways that maybe with people with large capital can't be bothered to do, because they just want to dump the capital in and then not have to think about it. So I think that is relevant. Just wanted to break down, Legendary, will come to you on that in a second, but wanted to break down my thoughts. I wrote a long-ish tweet yesterday on it, a little bit for myself to get on top of what I was doing, why I was doing it, and explain my thinking. So I said that yesterday I bridged 20, well, one day I bridged over 1 ETH, and then yesterday I bridged another 20 ETH over to Blast. I received about 1 ETH in Blur as an airdrop, and I bought one more ETH, which was all deposited for holder points. And then the third prong of my strategy will be to bid NFT collections that I like, and then list them as well if necessary. And then the reasons I came up with for why I felt like this was the right thing for me to do, and again, you need to pair that and compare that with your particular position and decide for yourselves, is that the Blur redacted rewards will be split down the middle between Blur traders and Blur holders. So by me, what did I do? By me holding Blur and by me bidding collections and listing, I get exposure to both of those things. And again, talking about the discrepancy between what whales have and what you have, like with 1 ETH in Blur, like or a couple of ETH maybe, that's not a huge amount, right? So the people who have way more Blur than me will earn more than me. So I guess the way to differentiate myself, if I end up being bothered enough to do that, I know I say that I will now, but we'll have to see if that actually happens, is by actually taking an active position in the market. Next, Blast rewards will be split down the middle between early access members and developers. So you mentioned 50-50 between developers and early access members. So by me depositing and inviting others, I get my exposure to that. And then thinking, like almost taking a step back and thinking about it, I think it's a good idea. Like, idle ETH is not ideal, though I think they should have communicated that earning interest is not risk-free. I think Pac-Man and the team have proven to be fantastic product builders and superior marketers, no matter what you think about what Blur has done to the market, whether you agree on that or not. Like, it's a fantastic product. And in addition, they have proven to deliver value back to early backers. And I recognize the multi-sig trust assumptions risk and the non-zero risk of yield from ETH staking and RWA protocols. So you have to be aware of like what the risks are, and then decide whether you're comfortable with them or not. And at 20 ETH, you get one single referral code, which I thought was, that's why I picked that number instead of 19 or 21 or 17 or something. So I thought that would be helpful as well. Then just a final point, because I'm reading exactly what I wrote, just do your own research. Do not wreck yourself following someone else blindly. Obviously, be careful with what you decide to do. Just wanted to share those thoughts because I wrote them yesterday and I thought it would be helpful. Legendary, your thoughts on that?
Yeah, I think the the 20 ETH threshold that you went for is a very important one. As you mentioned, you get one single referral code, meaning you don't have 10 that are one-time use, or however many however many the amount of referral codes was that you got initially. You have one that doesn't expire. So obviously, being a content creator and being able to put in 20 ETH, knowing the risks, puts you in a great position, right? Because you can keep talking about Blast. You can share that referral code, and you definitely can earn more upside on that. I wanted to dive a bit deeper into. I agree with most of your points, but I wanted to dive a bit deeper into the staked ETH, into the Lido ETH, because
That's good. Let's do that.
some of the risks that have sorry, my voice today, that I associate to that haven't been really pointed out by many people, or if so, they were like only hidden in the very last paragraphs of the newsletters or posts or whatever. It is the fact that Lido is quickly now approaching, again, I didn't check this morning, that 33% threshold of all ETH that is being staked by Lido, which, if you think about that, proof of stake is the consensus mechanism of ETH, puts you in a position where one single protocol has actually a credible power over ETH, has a risk exposure by that, and it also gets to a point where it becomes interesting for potentially for regulators. If you think about the fact that this is a decentralized network that then ends up being controlled by a couple of liquid staking derivatives and staking providers, but also cut away the regulatory point, someone else made an interesting point from the perspective of an institutional investor, saying if you look at BTC, BTC is super centralized. If you look at ETH, it is becoming more and more centralized. That these are the investments that they are too late as an institutional investor, and they'd rather be looking at a blockchain that has a community, has adoption, where they themselves can establish themselves as a force who could be that next powerful player who centralizes that blockchain. Because if you're a big institutional investor and you want to be invested in this space, you would be very comfortable to be in a position where you are a dominating force in either the consensus mechanism of BTC or in staking on ETH. And now that this ship has kind of sailed or is about to sail, those institutional investors suddenly, if they're still interested in Web3 and crypto, might be looking at other blockchains. So that centralization that goes together with Lido is a bit of a risk. Also, the counterpoint to that would be, this is the last point that I want to make, is that we spoke about it yesterday. If you look at the documentation on Blast, it says that it is Lido in the beginning, that it is MakerDAO for the returns on USDC in the beginning, but they are looking at other yield options. They're looking at real world asset tokenization. So I don't think that the team is ignorant of this fact. I might think that they're a bit surprised by the TVL that they already had reached so far, but they're definitely not ignorant of the fact that having, I don't know, $1 billion in Lido that is in this Blast multi-sig maybe in a week or a month or whatever is not a risk-free number. Let's call it like that.
Yeah, very important and interesting discussion. The discussion around staked ETH and the danger of it being centralized and deposited in one or two majority protocols has been something that people have been debating for quite some time now. It's quite technical. It's a little bit more complex, but I think that's a helpful little breakdown for people to be aware of. And yeah, I do think maybe the protocol, Blast themselves and the leaders will be aware of that number very much. So I guess we'll just have to see how that goes. But I guess the point there is that that's not an issue that is exclusive to Blast in some way. Like, this is a pre-existing issue with the way that ETH is staked, and that's something for people to bear in mind. Very good to touch on those risks. Good to touch on the various thoughts in terms of how we might want to play that. Hopefully that's given you some ideas. Want to touch in with Sensei, who has joined us up top. Are you going to explain to us, Sensei, what is going on with the turkey analogy? And also, what are your thoughts on Blast?
GM guys. Yes, I came up to defend my turkey chart, I guess. But great conversation about Blast. I'm glad you brought up the potential of it pushing Lido market share over 33%, because I don't really hear people talk about that much. And I saw a CL comment on someone posting about it, that if that were the case, he would encourage the team to spin up their own validators, which makes me wonder, maybe it's a problem that could be front ran that way. I don't know what they're doing, but it is a concern. Yeah, quickly about the turkey. This is this is just like a sort of black swan illustration of like sort of the life of a turkey, in which each next day confirms to the turkey it's just going to have another day to live until Thanksgiving comes. And it's just a helpful analogy to remember that confirmation bias follows us every day, and every day that the blast doesn't drug us is another day that confirms it's all going to be okay.
I love it. That's exactly what I was looking for. I was looking for the analogy of who's the turkey in this situation. Is it me? Is it Legendary? Is it Blast? Like, who is it? Because someone's got to be the turkey. So as you say, maybe it's like um Pac-Man hasn't rugged us yet. Every day he keeps proving us right. With every airdrop, he keeps making the token price go up. When will be the day when he doesn't do that? But one of the, on a more serious point, one of the interesting things you just said there that I'd not thought about is the potential for them to be like, look, okay, we now have so much ETH that we can't put it in Lido because we can't stake it with staked ETH. Maybe they become they become their own protocol, because they basically they have so much ETH that they in order to do it in a decentralized way, they'll have to spin up their own nodes. I think that would be really fascinating. Suddenly they become the bank. And it's actually crazy when you look at the TVL compared with other major L2s. And I saw a lot of hate on the timeline from other participants in other L2s, kind of throwing shade, just like, oh, this is risky, this is this is that. And I just detected, I mean, it's not without risk, I'll agree with that, but just detected a little bit of jealousy, in the sense that, damn, these people have managed to get $300 million bridged over in 48 hours. God knows what it's going to get to by the time we get to February. That's like a colossal bank at that point in time. And maybe then the business becomes something completely different when you have that many people trusting you with their capital, because that's basically what's happening. We're trusting them to hold our capital. So really interesting thought there, Sensei. Thank you so much for that. Legendary, definitely want to hear your response to that.
Absolutely. I also posted a little link in our private chat on StreamYard, so we maybe could share this as a little tab, because I wanted to give a bit of an overview of the liquid staking market. We are currently looking at a market share for Lido of 31.9%. It is up 2% over the last week. That doesn't sound a lot, but if you look at the numbers, we're looking at 9.1 million ETH. That's a bit more than 18 billion US dollars. The next biggest ETH staker is Coinbase with 4 million ETH. That's a 14% market share. And after that, it really drops off. You have Figment, you have Binance, you have Rocket Pool with 5, 4.2, and 2.9% respectively. So those Lido numbers are seriously being impacted and are going up by the Blast deposits. Again, you have 18.9 billion. That's 300 million alone due to Blast. If this continues, it will be enough to push Lido over that 33% mark. And I love the thought by K Sensei that another option for them would absolutely be to spin up their own validators and not be necessarily dependent on Lido or another liquid staking derivative. I don't know, however, how this will work together with the tech infrastructure that they are trying to build, and if this will still be as trusted as Lido, because you could make the argument by using Lido, they're using a tech stack that already 19 billion US dollars are trusting, as opposed to building their own thing. On the other hand, you could also make the argument that $300 million have been deposited into a multi-sig that promises you to build a layer 2 in the future because the team has the great track record. So maybe that trust issue is not as big as one think it might be.
I mean, the key question for me looking at this chart for the people who are not on YouTube, as Legendary said, like Lido has an overwhelming majority at 32%, Coinbase at 14%, and then every other liquid staking provider has 5% or less. You've got Figment at 5%, Binance at 4.2%, Rocket Pool at 2.9%. The key question to me is maybe this is still too early at this stage, but where is Blast in relation to these things at the moment? Legendary, I think you had the June dashboard for Blast, right? And I know obviously.
Yes, Blast is a 290 mil TVL, but obviously not all of that is ETH. It is 195 mil in ETH and 55 mil in staked ETH. So you would say it is 250 mil is the Blast ETH-based TVL, not accounting for the stable coins that have been deposited into Blast.
Okay, so 250 mil. Let's do this live. 200, 1, 2, 3, 1, 2, 3. That's 121,000 ETH. Is that? I think that's right. Which, I mean, you can double check that. I'm doing this live, guys, so we're trying to figure this out. I think that's 121,000 ETH, and that would put Blast in the 20th position in terms of.
It's 124k ETH.
Yeah.
So it would be bigger than, it would be actually in spot 18. It would be bigger, funny, than Bitpanda, which is Austrian's biggest centralized exchange and also very popular in not only Austria but the German-speaking market, so Germany, Switzerland, Austria.
Yeah, for sure. And I mean, I can see
48 hours. That's insane. In 48
yeah,
hours, that is insane.
Exactly. Like these are legit businesses. Swell. I can see Swell at number 26. I know that's like a legit company that focuses on this, as far as I know. So look, I guess what we're kind of concluding as we're doing this live investigation research is that these numbers are no joke. Like it's seriously impressive to have attracted that amount of capital. On the one hand, it poses a risk to Lido. Well, the whole stake the ecosystem, because Lido would have so much. But what we're kind of realizing is that they've got enough for this to now be their own business potentially, and they could spin out their own validators because there are legit other companies who focus on this type of thing, and with no more or no less than what they have. So, I mean, there's still another few months to go. Let's see where that goes. A Legendary, final reflections on that. I think that was really interesting to go down that route, do that investigation. It definitely made me think more on this. Final thoughts before we get into some really big NFT market wins and news from the other headlines.
Yes, a final thought, just because we talked about Swell, and I'm always looking at airdrops. Something that caught my eye about Swell is we've seen the Pyth airdrop, that very Oracle-based service used by many protocols. They rewarded users who used protocols that used Pyth oracles. And you have a competitor, which is Redstone, which also follows a very similar playbook to Pyth, and they are also providing oracles. One of the companies they're working with is Swell. So I was thinking to get some exposure to Swell, just to go for that potential 2-in-1 strategy where I might look at a Swell token, but also might have the potential to go for a Redstone airdrop if they were also to execute a similar airdrop strategy, just as Pyth did.
Yeah, that's interesting. I mean, I definitely take your point there. This is kind of a reflection on something that someone commented to me underneath my Blast post yesterday. And I just think everyone's got to make their own choices now, and there's an opportunity cost to each one. Lots of various protocols are either thinking of airdrops or doing one. I saw another huge one today that suggested that there would not be an airdrop to this year, without saying whether there would or wouldn't be one in the next year, and I just think it was clearly an illusion that there would be one the year after. But the thing is, you've got to think about like where your attention is going to go and how you're actually going to allocate, because you just can't hit all of these at this point. And so when someone asked me like, oh, why are you not doing this as well? Like 20 is a lot to go into Blast. It's like, look, I've done the evaluation. I think this is where I'm placing my chips for a period of time. And it's just not possible to hit all of them. And that's my kind of short reflection on that. But let's get into let's do the ACK news, because I think that was really cool. This was again, it's from a headline from the snapshot, which is pinned up top. There were 25 ACK worthy editions, which were sold out around 5K each via a raffle. And this is done with Avant Art, and it's done by a raffle. So you could have just applied to win the raffle spot. It was $5,000 around that for the mint. I reported on it multiple times in the snapshot, letting people know that it existed. And then now that the NFTs have been distributed, because there's both a physical edition and a digital edition, now that they've been distributed, they were selling for between 21K and 25. So you had Tiger Lily selling out for 10.5 ETH, which is like this yellowy version. The Devil, which is a bit of a scarier one, sold for 12 ETH. That's 24.7K. Louvre sold for 12.69, which is $26,000. And Starcrossed was the highest sale at 12.8, which is 26.3K. The cool thing about this is that, and I think this is really cool for artists to think of something like this, where they keep like a little bit of the detail just hidden back. So I believe the potential collectors were under the impression that they would receive all the same NFT and all the same print. But what ACK did was that he made all of them unique in the end. So although that is kind of the base is relatively similar, as you can see, as you can hear, depending on the name of the piece, the colors are very different. So the Devil one is all very red. The Louvre is yellow. Tiger Lily is yellow. Starcrossed has got like a more starry night vibe. And there's other different elements as well, which make them different. So I thought that was pretty cool from the artist to probably realistically really increase the value of them by making them individually unique. But also just a huge win for the artists, the collectors, a very nicely instigated and executed drop. And Avant Art, again, partnering up with some of the really top artists in the space, managing to do the dual drops of NFT plus physical, which people seem to be really, really enjoying. Legendary, that's my kind of summary on the situation. What are your thoughts?
Absolutely had no idea about this drop, so I'm commenting live on it, and I really like it because it is very respectful to do. You didn't set up your collectors, you didn't set up the expectations that they will receive unique artworks. They were kind of surprised by that. You as an artist, at the end of the day, are also a marketer, so you kind of under promised, over delivered. And it is something, when we were on Pio's show, we spoke about, what was it, Dirty Robot, I think, a Dirty Robot piece that dropped on OpenSea, and Pio was like, it is, a bit sarcastic, obviously, but he was like, it is easy to make money as an artist. Just release an edition of 100, 200, 800 pieces that look the same and sell them out as soon as the market is back. If you have the reputation as an artist, you can obviously do it. Again, that was said in like more joking and ironic sense. But even if you take that and say you release an edition and you set it up to be an edition of however many artworks that look the same, those 25 that could absolutely look the same, and then you surprise your collectors by actually making them unique, making them one of ones. Not only, as you said, adds to the value of the collection, but it's a very, very nice gesture to go for that extra work, because it clearly will have sold out otherwise, because people didn't know that they would get those one of ones at the end of the day. So I think that's a very cool and smart thing to do.
Yeah, absolutely. I agree with almost everything you said. And then just the final point is that ACK is just completely on fire. I saw someone reply to my tweet on it. I think potentially like a little bit surprised. And there's just no reason for people to be surprised about this, about ACK anymore. Almost everything that he does goes like this, basically. So if you are unaware, like you have to be aware, basically, because he's absolutely crushing it. And I appreciate that it's when, you know, when an artist is crushing it, lots of people could be crushing it, producing amazing stuff and might not go for these values. But I think one of the things he's managed to do is get a very loyal and successful collector base as well. So he's managed to do that side of the artistic bidding, which is to try to collect the right collectors in some respect. And I think he's done a pretty good job there as well. So happy to bring that across people's radar to make sure that they're aware. I want to do the Web3 roundup now, so people are up to date with what else has been going on in space in the last 24 hours. And I definitely want to touch on the Jack Butcher drop from yesterday, which went very well, I think, on a primary level, but also a little bit of drama after. I want to hear your thoughts on it, Legendary, and anyone else who may like to contribute. So let's get into it. The Web3 roundup from the rest of the space in the last 24 hours, as always, is pinned up top in the snapshot. We have Kyber Swap drained for $46 million. The team advises users to withdraw immediately. That is not good to see. Make sure you check if you were involved there. Next, Machi buys $188,000 of Blur to participate in season 3. I think his losses maybe amounted to more than $10 million, but I guess he still wants to play the game. Floor announces mobile minting all in the app. I think they're doing some pretty cool things where you can mint their NFTs all in their app on mobile, which is pretty cool. Getting into the creator corner, just 2 pieces from me today. Number 1, Jack Butcher. This is part of the headline we wanted to talk about. Jack Butcher issues refunds for failed transactions due to miscommunication around the trademark mint. And finally, the curated collection adds a Beeple's politics is bullshit to its collection. The founder there said that it was one of his biggest personal regrets of not owning one in the last bull run, so wanted to get one of those. So that is the Web3 roundup. That is the creator corner. Legendary, I think we want to touch on Jack Butcher's successful mint. Any thoughts on that, or do you want me to set it up while you change the headline?
Absolutely would like for you to set it up. Also want to take 1 second to once again shout out FT in the comments for providing a bit of extra context on the Kyber swap hack that I just found hilarious to share. The hacker sent a message to the devs, which reads like this: "Dear Kyber swap developers, employees, DAO members, and liquidity pools, negotiations will start in a few hours when I'm fully rested. Thank you." So I love that he is preparing, getting his extra rest, a couple of hours of napping in before he's ready to negotiate with the Kyberswap team.
Absolutely. I mean, it's funny. It's instinctively funny. I still feel, just to say, like, I feel sorry for all the people involved, all the people who've been hacked, and any difficulty they're feeling now. But God, this space is just pure comedy sometimes. I guess he's going to have a nice sleep and then come back to the negotiating table whenever he's well rested. So thank you, FT, for that additional context. Let's hit it then. So I'll do this while you change the title, Legendary. For the people who don't know, Jack Butcher dropped 2 collections yesterday with the Red Bull Racing kind of team as part of that Velocity Pass. There was the trademark collection, which was the 10,000 piece generative collection. That was a mint at 0.69 ETH. And then there was the signature collection, which was this more curated set of one of ones. And it went pretty well. So they sold out. The mint price of here we go, trademarks. So it ran up to about 0.15 for a little bit of time. It seems to now drop down to 0.11. So roughly a 2x, a little bit less than a 2x for Jack Butcher. However, there was a little bit of drama because there was a problem with the transaction, or there were lots of people who made transactions and it didn't go through for whatever reason. And Jack actually came out to say that he was going to refund all of the people who tried to mint and couldn't because of the lack of information or the improper information which he provided earlier in the day. So he said specifically, "This morning I shared info that I was given that was not correct. I will ship out refunds as soon as scripts are ready to run. My name on it, my responsibility." Interestingly, a lot of people in the comments were kind of saying, "I don't know why you have to do that as the artist. Like it should, like Zeneca has said in the comments, it really should be the platform refunding here, and this is above and beyond from you." So another prominent collector, Fact, said, "I don't think the NFT community should stand by and let the artist subsidize from his earnings. Surely Bybit official and art on the internet would not stand for that." So interesting thing that's going on there. So I guess two things. One, it was a successful mint, although some of the prices maybe come down, in particular for the signature collection post mint. So just to be aware of that. But then this second question, Legendary, of what happens when things go wrong, and it's kind of a partnership between the platform and the artist. Where do you stand on that?
Very, very good question. I don't think you could make it an obligation for the artist to refund when things go wrong. To me, realistically speaking, it becomes a question of kind of where is your position, where is your brand. Jack Butcher obviously has one of the most successful, most trusted, most coveted art brands in the industry right now. We spoke about how everyone wants to collaborate with him. So yes, maybe he could say, look, this is not on me. I'm not going to refund you. If anyone, then someone else should be doing that. But just given how big the brand is that he already has built, it is, in my opinion, the right thing to do, to pay the refund out of your own pocket. Don't go into a lengthy discussion as to whose responsibility that should be, because at the end of the day, you have your reputation to protect. And if the brand's big enough and you can afford that, you should definitely do that. Obviously can't make the case for small artists who might not have the means to do that. But in his case, I think that was definitely the right and smart thing to do.
Interesting. Yeah, I didn't really know. I just, well, this is what I think. I think it's incredibly good that he chose to do that. And the type of mentality that it takes for someone to say, like, look, my name was on it. It doesn't matter whose fault it was. My name was on it. Therefore, it's my responsibility. Like, I just have huge amount of respect for that. I think that is ultimately the way people should be oriented. That's kind of the way that I think I would want to orient myself as well. Just like, look, if it's attached to me and it's got my name on it, then I'm going to take responsibility for it. You would hope to think, this is the kind of caveat to that, you would hope to think that the people who you partner with will also want to take some of that responsibility. Because if you're there taking all of it, but you've done something in partnership, you'd like to think that, well, the people who you've partnered with would maybe socialize some of those losses, because it's like, well, yes, I know that your name is attached to it, but it's also our name and it's also someone else's name. And so whoever's name is attached with it, then maybe they should be able to stand up and take that responsibility on. I don't know whether that's something that might be done behind the scenes, where it's like Jack just sorts it out first, and then other people can sort it out behind the scenes with like, look, that was our fault as well. So my kind of conclusion on that is amazing thing to do. Ultimately a stand-up thing to do. Do I think it should be expected? Not specifically. And you'd also want, in an ideal world, you want the people, like there was someone who is truly responsible for communicating the wrong information. And you'd like to think that whoever was in charge there might want to stand up and shoulder some of the responsibility. But I think it's a great sign of leadership to just be like, look, in the end, doesn't matter. It doesn't matter who it was. It's I'm the leader here. It's kind of like an alpha move in that respect. Just like, it doesn't matter what the real problem was. I'm the leader, so it's going to be on me. Final thoughts, Legendary, as we draw to the conclusion of the show.
Yeah, it's not only an alpha move, it's also how you build a quality brand. I mean, you could make the argument, Bybit could easily, as well as Red Bull, as well as Jack Butcher could stomach those. What was it, 26 ETH, a bit more than 50K, not a lot of money. So the first one who steps up and says, look, it's my name on it, I'm going to pay that, I'm going to make sure everyone's refunded, no matter what happens in the back end, if he will get parts of that refunds back himself or not, that doesn't matter. It is just a quality move to do. And if you would go to, I don't know, a Louis Vuitton store and buy a watch, and Louis Vuitton doesn't manufacture the watches themselves, they have a company who does that, and something's wrong with the watch, you would want Louis Vuitton to take care of that, and you wouldn't want them to be like, no, actually, you have to go to the guys who manufactured the watch, because they would be, it's our brand name, it's our quality, and we will take care of that. And that's a very good mentality to have.
Like it. Let's end it on that people taking responsibility, even sometimes when it's not their own responsibility, thinking of themselves as the brand, taking ownership for everything in order to be super successful, build something important and lasting and meaningful in this space. Thank you for that perspective, Legendary. I thought that was a very good way to end it. Thank you to everyone else who has joined us today on Thanksgiving. I hope you've had a wonderful day. I hope you get to spend some time with friends and family and you enjoy yourselves. Have a wonderful day. We'll be back as usual tomorrow for the last day of the working week. Take care. Have a great day. Bye-bye.